Government has smoothly carried out consolidation, reducing the number of public sector banks by 8. At the same time, as many as 6 public sector banks have been enabled to come out of prompt corrective action framework. We have enabled 6 public sector banks to come out of that situation. Having addressed the legacy issues, public sector banks are now proposed to be further provided 70,000 crores of rupees capital to boost credit for a strong impetus to the economy. 70,000 crores of rupees will be provided in order that capital will be boosted so that credit can be improved. To further improve ease of living, they will leverage technology, offering online personal loans, doorstep banking, and enabling customers of one public sector bank to access services across all public sector banks and so on. In addition, government will initiate steps to empower account holders to remedy the current situation in which they do not have control over deposits of cash by others into their accounts. There is an issue now. Unknowing to them, there are money being deposited into accounts, and that is creating a lot of problems for customers. So we will be addressing that also. We will initiate steps to address that problem. Reforms will also be undertaken to strengthen governance in public sector banks. Non-banking financial companies are playing an extremely important role in sustaining consumption demand as well as capital formation in small and medium industrial segment. Nbf Fees that are fundamentally sound should continue to get funding from banks and mutual funds without being unduly risk-averse. For purchase of high-rated pooled assets of financially sound NBFCs amounting to a total of 1 lakh crore rupees during the current financial year, government will provide one-time 6 months partial credit guarantee to public sector banks for the first loss of up to 10%. I shall read this again. For the purchase of high-rated pooled assets of financially sound NBFCs amounting to a total of 1 lakh crores of rupees during the current financial year, government will provide one-time 6 months partial credit guarantee to public sector banks for first loss up to 10%. Further, Reserve Bank of India is the regulator of the NBFCs. However, RBI has limited regulatory authority over NBFCs. Appropriate proposals for strengthening the regulatory authority of RBI over NBFCs are being placed in the finance bill. NBFCs which do public placement of debt have to maintain a debenture redemption reserve. And in addition, a special reserve as required by RBI has also to be maintained. To allow NBFCs to raise funds in public issues, the requirement of creating a DRR, that is a debenture redemption reserve, which is currently applicable for only public issues as private placements are exempt, this will be done away with. To bring more participants, especially NBFCs, not registered as NBFCs factor, on the TREDS platform, amendment in the Factoring Regulation Act 2011 is necessary, and steps will be taken to allow all NBFCs to directly participate on the TREDS platform. Efficient and conducive regulation of the housing sector is extremely important in our context. The National Housing Bank, besides being a refinancer and a lender, is also the regulator of the housing finance sector. This gives a somewhat conflicting and difficult mandate to the NHB. I am proposing to return the regulation authority over the housing finance sector from the NHB, National Housing Board, to the RBI. I'm proposing to return the regulation authority over the housing finance sector from NHB to the RBI. Necessary proposals have been placed in the finance bill even for that. Government has announced its intention to invest 100 lakh crores in infrastructure over the next 5 years. 100 lakh crores for infrastructure over the next 5 years. To this end, it is proposed to set up an expert committee to study the current situation relating to long-term finance and our past experience with development finance institutions, and this committee shall recommend the structure and required flow of funds through development finance institutions. The situation will be reviewed by them, and they will suggest measures. Pension Fund Regulatory Development Authority, PFRDA, implements and regulates the National Pension System, the NPS, and Atal Pension Yojana through various intermediaries, including, inter alia, the NPS Trust, keeping in view the wider interest of the subscribers and to maintain arm's-length relationship of the NPS Trust with PFRDA. Steps will be taken to separate the NPS Trust from PFRDA with appropriate organizational structure. To facilitate onshoring of international insurance transactions and to enable opening of branches by foreign reinsurers in the International Financial Service Center, it is proposed to reduce net owned fund requirement from 5,000 crores to 1,000 crores, 1,000 crores. I'll repeat that sentence, sir. To facilitate onshoring of international insurance transactions and to enable opening of branches by foreign reinsurers in the International Financial Services Center, it is proposed to reduce net owned fund requirement from 5,000 crores to 1,000 crores. Government has been following the policy of disinvestment in non-financial public sector undertakings, maintaining government stake not to go below 51%. Government is considering, in case where the undertaking is still to be retained in government control, to go below 51% to an appropriate level on case-to-case basis. Government has also decided to modify present policy of retaining 51% government stake to retaining 51% stake inclusive of the stake of government-controlled institutions. Sir Speaker, in order to improve the capital flows into the Indian economy, it is important to align domestic corporate systems and practices with global ones. It is also appreciated that global finance movement in equity uses certain parameters to evaluate the stocks in which they choose to invest. The government intends to further encourage retail participation in CPSEs, which of late has shown very encouraging upward trend. In order to provide additional investment space, the government would realign its holding in CPSEs, including banks, to permit greater availability of its shares and to improve depth of its market. Strategic disinvestment of select CPSEs would continue to remain a priority of this government. In view of current macroeconomic parameters, government would not only reinitiate the process of strategic disinvestment of Air India, but would offer more CPSEs for strategic participation by the private sector. I repeat this sentence. Strategic disinvestment of select CPSEs would continue to remain a priority for this government. In view of current macroeconomic parameters, government would not only reinitiate the process of strategic disinvestment of Air India, but also would offer more CPSEs for strategic participation by the private sector. Government is setting an enhanced target of rupees 1,05,000 crore of disinvestment receipts for the financial year 2019-20. The government will undertake strategic sale of PSUs. The government will also continue to do consolidation of PSUs in the non-financial space as well. Sir, ETFs have proved to be an important investment opportunity for retail investors and has turned out to be a good instrument of Government of India's disinvestment program. To expand this further, Government will offer an investment option in ETFs on the line of equity-linked savings scheme, which is ELSS. This would encourage long-term investments in CPSEs. For bringing better public ownership of the PSUs and also bring greater commercial and market orientation of the listed PSUs, the government will take all necessary steps to meet public shareholding norms of 25% for all listed PSUs and raise the foreign shareholding limits to maximum permissible sector limits for all PSUs, companies which are part of emerging market index. Sir, the Indian sovereign debt, external debt, India's sovereign external debt to GDP is among the lowest globally at less than 5%. Honorable Speaker, sir, this is a very important indicator for India. I am repeating the line. India's sovereign external debt to GDP is among the lowest globally at less than 5%. The government will start raising a part of its gross borrowing program in external markets in external currencies. This will also have beneficial impact on demand situation for the government securities in domestic market. A new series of coins, sir, a new series of coins of 1 rupee, 2 rupees, 5 rupees, 10 rupees and 20 rupees, easily identifiable to the visually impaired also, were released by the government minister, by the Honorable Prime Minister on 7th March 2019. These new coins will be made available for public use shortly. Sir, in the first 50 years after independence, we emphasized on rights. So I draw your attention to this line, which marks the end of part A of my speech. In the first 50 years after independence, we emphasized on rights. Marking 75 years of our independence, we should place emphasis on our duty towards India. Place emphasis on our duty towards India without undermining our rights. Thinkers all over the world have supported the argument that in performing one's duty, protection of one's rights is inherent. In performing one's duty, the protection of one's right is inherent in it. For the bright future of India, when again in 2022 we will remember our freedom fighters, we should dedicate ourselves to the service of the nation. So now I move to part B, which is something of great interest for all of us, taxation related. Honorable Speaker, sir, I see a lot of members sitting up. Mr. Speaker, sir, I begin by thanking our taxpayers who, as responsible citizens, are taxpayers paying their taxes. It is because of their valuable contribution that our government is able to work for our collective dream of inclusive and all-round development of our nation. I place my appreciation to the honest taxpayer of India. At this juncture, sir, I find wisdom in a line from Purananuru, which is a Sangam time Tamil literature piece. A Tamil Sangam era work, and this is done by Pisirandayar. Pisirandayar, yes. The verse, Yanai Pugunda Nilam, a land into which elephant gets in. Yanai Pugunda Nilam. This was sung as an advice to the king, a Pandyan king, Pandyan Aruvudai Nambi. The king is Pandyan Aruvudai Nambi, and Pisirandayar gives this advice to him. It's a long verse. I'm only picking up the first line, some line from the middle, and the end. Kai nel aruthu kavalang koline. Kai nel aruthu kavalang koline. Arivudai vendan neriyarindhu koline. Arivudai vendan neriyarindhu koline. Parivu taba edukkum pindam natchin. Parivu taba edukkum pindam natchin. Yanai pukka pulam pol. Yanai pukka pulam pola. Thanum unnan ulagamum kedume. Meaning, a few mounds of rice, just a few mounds of rice from paddy that is harvested from a small piece of land would be sufficient for the elephant. For an elephant, just a few mounds of rice cooked from paddy which is taken from a small piece of land will be sufficient. But what if the elephant itself enters into the field and starts eating? It would eat far lesser than what it will trample with its foot. I hope the meaning is clear. So, the advice given to Pandyan Arivudai Nambi is a valuable advice that this government appreciates. An elephant, if it is given mounds of rice, here I would refer to taxation, will be quite happy. It doesn't have to enter into the field and trample to eat the food. So we don't intend to trample anybody. Sir, in direct taxes therefore, sir, Mr. Speaker, due to a slew of efforts taken by our government, the direct tax revenue has significantly increased over the past couple of years. It has increased by over 78% from 6.38 lakh crores in financial year 2013-14 to around 11.37 lakh crores in financial year 2018. From 6.38 lakh crores to 11.37 lakh crores between 13-14 and 18-19. It is now growing at double-digit rate every year. Let me recall, sir, and reiterate this government's effort over the past 5 years to alleviate the tax burden on small and medium income earners. This includes self-employed as well as small traders, salary earners, and senior citizens. Only when their annual taxable income exceeds 5 lakhs, only when their annual taxable income exceeds 5 lakhs, they are required to pay any income tax. The details of our efforts and achievements on this front during the past few years are given in the annexure to the speech. I am not going into the details of it. Speaker, sir, my tax proposals will aim to stimulate growth, incentivize affordable housing, and encourage startups by releasing the entrepreneurial spirit. It will also be geared towards promoting digital economy. I aim to simplify tax administration and bring greater transparency. So far as corporate tax is concerned, we continue with phased reduction in rates. Currently, a lower rate of 25% is only applicable to companies having annual turnover up to 250 crores. Currently, the lower rate of 25% is only applicable to companies having annual turnover of up to 250 crores. I propose to widen this to include all companies having an annual turnover of up to 400 crores. This will cover 99.3% of all the companies. Only 0.7% of companies will remain outside of this rate. So in order to boost economic growth and make in India, the government will launch a scheme to invite global companies through a transparent competitive bidding to set up mega manufacturing plants in sunrise and advanced technology areas such as semiconductor fabrication, solar photovoltaic cells, lithium storage batteries, solar electric charging infrastructure, computer servers, laptops, etc., and provide them investment-linked income tax exemptions under 35AD of the Income Tax Act and other indirect tax benefits. So, on electric vehicles. Considering our large consumer base, we aim to leapfrog and envision India as a global hub of manufacturing of electric vehicles. A global hub of manufacturing electric vehicles. Inclusion of solar storage batteries and charging infrastructure in the above scheme will boost our efforts. Government has already moved the GST Council to lower the GST rate on electric vehicles from 12 to 5%. Also, to make electric vehicle affordable to consumers, our government will provide additional income tax deduction of 1.5 lakhs of rupees on the interest paid on loans taken to purchase electric vehicles. What does this mean? This amounts to a benefit of 2.5 lakh crores over the loan period to the taxpayer who takes loans to purchase electric vehicles. So by the time the entire period of the loan ends, for you having taken the loan for buying an electric vehicle, you would benefit to the level of 2.5 lakh rupees because of this income tax deduction which is being brought in for encouraging purchase of electric vehicles. So startups, as I said when I was talking about the youth of this country, startups require, and we have been consistently providing them all the encouragement. Startups in India are taking firm roots and their continued growth needs to be encouraged. To resolve the so-called angel tax issue, I'm sure a lot of members are concerned on this issue. To resolve the so-called angel tax issue, the startups and their investors who file requisite declarations and provide information in their returns will not be subjected to any kind of scrutiny in respect of valuation of share premiums. The issue of establishing identity of the investor and source of his funds will be resolved by putting in place a mechanism of e-verification, so there's no man-to-man interface there. With this, funds raised by startups will not require, the funds raised by startups will not require any kind of scrutiny from the income tax department. In addition, special administrative arrangements shall be made by the Central Board of Direct Taxes for pending assessments of startups and redressal of their grievances. It will be ensured that no inquiry or verification in such cases be carried out by the assessing officer without obtaining approval of his supervisory officer. So the element of discretion with which startups were suffering has been removed. So without obtaining the approval of his supervisory officer, an assessing officer shall not worry the assessee. At present, startups are not required to justify fair market value of their shares issued to certain investors, including Category 1 alternative investment funds. I propose to extend this benefit to Category 2 alternative investment funds also. At the moment, it's available for AIF Category 1. Now I expand this to include Category 2 AIFs also. Therefore, valuation of shares issued to these funds shall be beyond the scope of income tax scrutiny. Again, you get out of income tax scrutiny when that has been done. I also propose to relax some of the conditions for carry forward and set off losses in the case of startups. I also propose to extend the period of exemption of capital gains arising from sale of residential house for investment in startups up to 31/3/2021 and relax certain other conditions of this exemption. So affordable housing, which is an aim of this government. For realization of the goal of housing for all and affordable housing, a tax holiday has already been provided on the profits earned by developers of affordable housing. Also, interest paid on housing loans is allowed as a deduction to the extent of 2 lakhs in respect of self-occupied property. In order to provide a further impetus, I propose to allow an additional deduction of up to 1,50,000 rupees for interest paid on loans borrowed up to 31st March 2020, next year, for purchase of affordable house valued up to 45 lakhs. Therefore, a person purchasing an affordable house will now get an enhanced interest deduction up to 3.5 lakhs of rupees. This will translate into benefit of 7 lakh of rupees to the middle class home buyers over their loan period of 15 years. Just as we said about the electric cars, now we are saying the tax deduction provision that we are coming in now with will enable home buyers of the affordable home category that in the period of 15 years when your loan, home loan runs, the net gain would be 7 lakh of rupees. This will immediately benefit a lot of middle class. So on the Nbf Fees, a lot of discussion happens today about Nbf Fees. Non-banking financial companies play an increasingly important role in India's financial system. With the enhanced levels of regulation they are subjected to by the Reserve Bank of India, there is a need to provide greater parity in their tax treatments vis-à-vis scheduled banks. Currently, interest on certain bad or doubtful debts made by scheduled banks and other financial institutions is allowed to be offered to tax in the year in which this interest is actually received. I propose to extend this facility to deposit taking as well as systematically important non-deposit taking NBFCs also.